There's so much emotionally charged hype out there designed to sell newspapers and advertising rather than inform investors and traders. Want entertainment? Buy a newspaper or magazine or turn on the news. Want investment and trading concepts explained? Look to TechniTrader. TechniTrader is the gold standard in trading and investing education taught by experienced and accredited professionals. Don't learn to trade from fad-chasing day traders, and certainly don't think you can grow your portfolio by attending a weekend seminar or watching a free video online. Success in the financial markets is attainable, but like any high-paying profession, it requires the proper education to achieve consistent success. Join those happy few who've taken their investing and trading seriously. Call 888-846-5577 or visit technitrader.com.
Hi, everyone. Today, I'm going to answer some questions that I was sent from another radio show asking me about Gamestop and what's going to happen, understanding the Congress and what's going on there, and all the activity that is surrounding the investigation as to what happened and who is at fault and what went wrong, because a lot did go wrong. First of all, I want to remind you that the majority of Americans don't know much about the stock market. A lot of people are invested in the market, but they have no idea what's going on. They don't understand what they're investing in. They take high risks because of herd mentality and being influenced into buying something because they see it going up and up and up and they think it'll go on forever. No stock will go up indefinitely at a rapid pace forever. It will stop at some point, and then we will have a problem because it will start to go down because there are no more buyers. So when you're tempted to buy something speculatively, stop and consider the risk, and also stop and consider the potential of that stock in the future. There are many things about GameStop that are a huge question to me. One is how come way before this happened, there was a huge lot block order that sent the amount of outstanding shares, percentage shares held by institutions, to 118%. Before they bought that block order, that was not the case for GameStop. Probably about 60% of the stock was held outstanding by the institutions, and the rest was held by some investors. The problem is in order to get 118% institutional ownership, that had to be a massive block order. They did it long before the stock moved above $17, sometime back last year. Now, institutions are very wise investors, and they don't go around buying block orders of a stock to short-term trade it. They buy it for a long-term investment for a reason. It could have been a derivatives developer. It could have been a buy-side institution. It could have been anything that was investigating and decided that they would buy this stock for a long-term hold. In order to buy the stock for a long-term hold, they had to have some information about it that said to them that there was going to be worthwhile to hold that stock for a long-term hold. Maybe it was a merger or acquisition. Maybe they were coming out and reinventing something. Something is going on before this whole speculative move. The second factor is that we have a very, very, very large group of millions of Reddit groupies, all influenced by some guru who is still hidden. Everybody likes to think it's a group decision, but somebody led it, and that person who led it knew exactly what they were doing, and they probably had some money at stake that they were going to make a huge amount of money influencing these people to buy this stock all as one group. It's not the Reddit group's fault. They were misled. They were misinformed. They didn't understand what they were doing. They thought they were doing something against a hedge fund or a short seller. But the fact is that there are many, many, many different types of investors in this stock. There are people who bought it a long time ago and just kept holding it, even though it kept going down and down. Small lot investors. There's some small funds that own this stock. There are buy-side institutions that own this stock. There's derivative developers that own this stock. There are some investors who bought it recently. There are some short-term traders who bought it as a swing trade as it was moving up. It's not just the Reddit group against a short seller or two. And when a group comes together like this, the SEC is going to take a look at this and say, well, if you're going to be 1 million strong or whatever it is, it doesn't matter what number it is, it's a large number, and you're going to all trade the same, now you're an organization. And the SEC will state that they have to have regulations for an organization because all organizations are regulated. So I think that what's going to come out of this is a certain number of retail traders all trading together as a group is now going to be classified as an organization or an entity, and it will be regulated as such and have more restrictions. Because the SEC will not allow people to gamble and drive a price up like this speculatively, because what happens is it hurts the reputation of the stock market. I'm receiving many, many questions asking about why is the market so gambling? Why can't they regulate it and make it so that it's investing and not gambling? Well, it is investing and not gambling. Gamestop is just one stock out of 5,718 stocks today. It's just one over-speculated stock over a few days. That is not a stock market gambling. The most of the investment money, 99% of it, is in long term. And since it's in long term, a lot of people can borrow the stock and trade that stock on a short-term basis or use it for options or use it for derivatives or whatever. But it's the long-term investing that keeps the stock market going up. It's the long-term investing that keeps the market stable. It's the long-term investing community that the 401ks and the long-term investors and mutual fund investors who keep the market stable. And it is very, 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 very stable. It is not volatile. You got to stop listening to the news, folks. You've just got to stop listening to the TV news. TV news is not news, it's entertainment. The news that you read is not news, it's entertainment. News companies are not even classified as news companies anymore. They're classified as entertainment companies, and they can say anything they want, whether it's true or not, and they can say it in such a manner that you believe that it is the truth when it is not. Misinformation is the worst thing we have. Misinformation is a pandemic of information. It is more deadly than the pandemic we're dealing with because it makes people believe things that are not true, and they act on these false information. So you've got to be careful. So I believe that the SEC will at some point either regulate the groups that come together in large quantities, forcing everyone to be registered, acknowledging who's in the group, what they're doing, and so on and so forth, so the SEC can monitor them and keep track of them like an HFT or a hedge fund or anybody else. If you're going to work as a group, as an entity or an enterprise or an organization, you're going to be regulated. And that's what's going to happen. The other thing the SEC can do, if they want to, is they can say that there can't be any more app brokers on phones. They could do that. They have the right to regulate the industry, the stock market, to a degree so that it is safe for everyone, so that investors can feel safe, so that everyone can put their money in and not have over-speculation and gambling going on that can ruin a company like GME, that can destroy people, that people can lose a lot of money because the people who lost the most amount of money were not the short sellers. Sorry, folks. They held and waited for it to go down. They borrowed money so they could hold and wait for it to go down. And it did. So the smaller investors and the retail traders who bought in late that lost the money. So who hurt who is a good question. And you have to be careful because a lot of times what we hear and what we see is not true. This was a gambling mode. Some guru or somebody powerful with a whole lot of money made a lot of money and also created this hatred of short sellers and hedge funds, which is totally ridiculous. First of all, there are very, very, very few short sellers. There are a very small number in the whole entire market. The second thing is that hedge funds are not evil. They're a contrarian factor, and everyone knows that a contrarian position or a contrarian fund, an inverse fund, is only going to do well in a true bear market. That's what it is. And it's used for mitigation and hedging when a buy-side institution buys a stock and they feel that there's a risk factor involved, or for professional traders trading for their company and they see a lot of risk factor, they used to buy hedge funds to mitigate that risk. It was an insurance policy. They don't do that anymore. That's why hedge funds are going out of business, not because there isn't money to be made as a hedge fund, but because they can't sell their product to the buy-side institutions, which is where the bulk of their money came from. Not from selling short, not from trying to go against the market. And the short sellers don't deliberately try to force the stock down because that's against the law. That's a prison sentence. You can't go around saying, this company's bad, this company's bad, this company's bad. and then sell short because that's illegal. They can't do that. They see a speculative stock and they recognize that it can't go that far and it can't go indefinitely up. Going from $17 a share to $500 a share in a couple of days is preposterously speculated gambling. The short sellers knew this, and all they had to do was position themselves in and sell with the buyers and wait and wait and wait. And of course, it will go down because it's so far beyond its fundamental values, it cannot sustain it. And we have quite a few stocks right now that are over their value of their fundamentals. And don't believe a single word of this idea that fundamentals don't matter. Yes, they do. And at some point, all stocks that are over-speculated will return to the fundamental level. There are two ways that can happen. One, the stock goes in a bear market cycle and goes down. And a huge number of stocks were doing that between 217 and 218. Even though the Dow index went up and the NASDAQ index went up, what we actually had was a bear market that was hidden. And then the March low of 2020 was that final collapse. That's very hard for me to talk against because people see the indexes going up and they think, oh, that represents the stock market. Oh, the stock market's going up. No, it isn't. The index is going up. The Dow 30 industrial average only covers a small percentage. It doesn't have all the sectors. It only has 9. It doesn't have the 11. And it only has 26 of the 142 industries. So does it represent the market? Not by a long shot. Is it going up? Well, those 30 stocks are going up. Why? Because most of them are in buyback mode. Corporations are buying back their shares of stock to drive their price up. This is an artificial inflation. This is hyperinflation in the stock market. And at some point, it has to correct either down or into a trading range, one or the other. Both do the same thing. Trading ranges usually last longer. The trading range market that was hidden from 2017 to 2020 was a very long trading range bear market for all those companies that were in it. Now, granted, there were a few hundred companies out of the 5,400 companies that were listed in the market at that time that went up. And they made the indexes go up, and then they kept 401ks doing great. And even after the March lows, they rebounded and come right back up because a lot of people bought stocks back up to the speculative level. But now what's going to happen? Well, we need to pattern that out at some point. Either those few hundred stocks are going to have a bear cycle and they're going to go down, or they're going to have a bear cycle and they're going to go sideways. Those are the two options. They can't stay at their high. They can't keep moving higher and higher and higher, further and further away from their fundamentals, because the same thing will happen to them as happened to Gamestop. Then suddenly, at some point, the buyers will stop buying and the stock will crash, not because people are selling it short, but because there are no buyers. You always have to remember that if the stock market goes up because of the buoyancy, because of the buyers, continually new buyers coming in and buying more shares, or corporations buying back shares of stock of their own, reducing the inventory out there, the outstanding shares, and so the stock price moves up again. So you have to remember that. I have zero faith in Congress knowing anything about the stock market. They have advisors from the stock market, but they're just like every other average person. Yes, they make more money, but they don't know anything more. Just because somebody has more money doesn't mean that they know more about the stock market. The majority of Americans, about 90%, do not know anything about the stock market. They turn over their money to a financial planner or a money manager and they walk away and hope that that person does them good. And if the person does them good, they think the stock market's great. If the person does them bad, then they hate the stock market. The stock market is an entity. It represents the financial market. It represents the stocks that are listed on the public exchanges. It lists all the important companies in the United States, both the giants like Amazon and Apple and Google and all of those. And it also represents all the small startup companies that are publicly listed that are going to become the next generation of big blue chip stocks. The big blue chip stocks are only the greats for about 10 years, maybe 15 years. After that, they decline. IBM used to be a huge winner. It isn't anymore. Dell Computers was the company to own along with Cisco and Intel in the 90s. No more. Yahoo was huge. Everybody wanted to own Yahoo in the 90s. Gone. And I'm sorry, but these big companies are now gone too. The GameStop situation is going to have the SEC evaluate every single aspect of the retail groups. Now, the concentration of scrutiny is on the retail groups. Reddit and others like that. It's on the social media groups. And it's going to be on there for some time. And the SEC will make a decision and they will create rules and regulations. They may penalize people and they will force the retail traders to be responsible for their actions. Nobody has the right to ruin a company. Nobody has the right to throw speculation into the stratosphere and then have it collapse for their benefit. Nobody has the right to manipulate the market like that. It's illegal. So somebody influenced all these millions of people to buy this stock. Robinhood is being taken accountable, and it will probably destroy Robinhood. So it may be that what we find is that the broker apps on your phone just simply disappear. All of them go away. If Robinhood crashes and crumbles, if the SEC finds it or puts it out of business or hauls somebody off to jail, that's the end of Robinhood. That's the end of it. Maybe what this guru really wanted to do is destroy Robinhood. We don't know. We really don't know what happened. Everything's speculation. I certainly don't know, but I do know that the institutions, the buy-side institutions and derivatives developers bought a huge block order back in October, November, December of last year before all this began. And their investment was for a long-term hold. Now they're probably going to be rotating out of it because it's been ruined. That company wasn't in good shape to begin with, but it didn't deserve to be treated like a dartboard that somebody could attack and then try to get even with some hedge fund that they hated. This is not how the stock market works. The stock market is the business of businesses. It's for everyone. And no one has the right to destroy a company to get even with a hedge fund. But what actually happened is all the smaller lot, traders and investors, lost money because they didn't understand that the stock price will not go up forever and it won't climb to 500 and stay there unless the fundamentals meet it. And they didn't. So it crashes back down until it finds fundamental support. And that was a huge loss because they didn't understand what they were doing and they were influenced by someone who was manipulating their minds and their hearts and making them hate a hedge fund. A hedge fund is a fund that uses the contrarian side to mitigate risk or to make profits on a short-term basis. They're not evil. They're part of the market. Like HFTs are part of the market. Retail are part of the market. Odd lot investors are part of the market. Small funds are part of the market. Buy-side are part of the market. They're all part of the market. Wealthy people are part of the market. Wealthy people either made their own wealth, and most of the wealthy people didn't start out from wealthy families. They didn't come from well-to-do families. They came out of poverty. You should admire the wealthy people because they started with nothing and built an empire. Most of the time, these were not well-to-do people. Most of these times, these people were impoverished people or people from poor environments, and they made something of themselves. So they should be admired, not hated. Yes, there are the inheritors, the people who come after, the generations that come after. But they don't know anything about the stock market, and they don't do anything other than turn their money over into a trust fund and have some money manager manage it for them so they can squander their fortunes. They're not trading the stock market. They're not actually investing their own money. So the idea that wealthy people hate and don't want people in the market is silly. If they're inheritors, they certainly don't know anything about the market and have no idea if they're little guys in the market because they don't pay any attention. They just take money out of their trust and spend it. And those who started out impoverished or poor or had to work their way up and build a huge company out of nothing and make a huge company like Amazon or Apple or Google or whatever, a lot of companies came from people who had nothing. And they built an empire. They built a corporation that is global. That should be admired, not despised. Because anybody in America can do that. Any young person can take their idea and build an Amazon. If you work hard enough, if you have a good enough idea, if you're willing to commit the enormous amount of time and effort, blood, sweat, and tears it takes to build a big corporation. Most people don't want to work that hard. They just want to work 40 hours a week and be done with it. But there are those few who really want to grow a big corporation. And they work very, very hard at it. Gamestop isn't going to be a huge corporation. Its DVDs and its games are no longer popular in that format, and it would have to reinvent. Maybe it was reinventing before all this happened. But you have to understand, that it's not just one group against another group. This isn't a casino. There are 11 different market participant groups, and all of them at some point were in Gamestop. And a lot of them got hurt because somebody told a whole lot of Reddit groupies to buy the stock and drive it up and they would make a fortune from the sell shorters. No contest. The hedge funds had billions and the little guys had a few thousand or a few 100,000. That's all they had. This isn't David and Goliath. It's not one little guy against one big guy. It is a hugely complex market. There are $220 billion pumping through the markets every single day. There are 1,000 thousands in a million. There are 1,000 millions in a billion. $220 billion a day is huge. There are so many market participant groups, you have no idea how many people are trading and what's going on, because it's not all on the exchanges. And it's not one company. It's 5,718 companies and rising. And every single one of those listed public companies deserves your respect. Invest in them because you believe the company will grow. Invest in them because you believe that the company has a good CEO and a great product, and you can see that there's an opportunity for this company's stock to go up. Trade the stock when it has swing trade runs or precision platforms. Invest in it or trade in it to enjoy the American prosperity that the stock market and public listed companies provide to you. But there is no free ride. There's no entitlement. No one owes you the great stock of 2030. You have to find it for yourself. Visit TechniTrader.com because we have a lot of instruction videos and information. Our courses are the best anywhere. They are the best. If you want a good education, if you want the best education, come to TechniTrader because there is no other place that you can get the information that I provide. Our support is unparalleled. We answer tons of student questions every day. We work one-on-one with students. We mentor. We have special webinars just for students, a special website just for students, and they learn and they become successful. So if you want to be successful in the market, if you don't want to be somebody who's lost a lot of money with GameStop because you followed a foolish guru, then come to TechniTrader because we will teach you what you need to know to be consistently successful. I'm Martha Stokes, and that's the radio show for this week.
There's so much emotionally charged hype out there designed to sell newspapers and advertising rather than inform investors and traders. Want entertainment? Buy a newspaper or magazine or turn on the news. Want investment and trading concepts explained? Look to TechniTrader. TechniTrader is the gold standard in trading and investing education taught by experienced and accredited professionals. Don't learn to trade from fad-chasing day traders, and certainly don't think you can grow your portfolio by attending a weekend seminar or watching a free video online. Success in the financial markets is attainable, but like any high-paying profession, it requires the proper education to achieve consistent success. Join those happy few who've taken their investing and trading seriously. Call 888-846-5577 or visit technitrader.com.